Back to the Keiser Report. Time now to go to New York and speak with Dr. Michael Hudson. Dr. Hudson, welcome back to the Keiser Report.
Thank you very much.
All right, Dr. Michael Hudson, let's get into Greece. Your thoughts on Greece. What's happening?
Well, it's as if finance has become the new mode of warfare there. The Financial Times reported that when Parliament passed the agreement to surrender to Europe, it was done to the smell of tear gas and the sign of sirens. And the Wall Street Journal had a very interesting article saying, well, now it's time for them to sell off the Parthenon, sell off the Greek islands. This is what in the past you needed an army to achieve. What today is being done financially. So finance and bankers are the new army. And instead of an army coming in to seize the land, which involves people dying, you simply have the IMF representatives and you buy out the Socialist Party and tell them, look, just surrender. Give us your land. Give us your property. This is phase 2 of the financialization program, and I can't believe that this is going to actually succeed if a country is going to impose itself in poverty, reduce its wages by 30%, and forfeit the entire public sector to foreign creditors. People should have a vote, otherwise it's not legal. There's no referendum in Greece over whether people are going to actually democratically acquiesce in a surrender. And this means that when there is an election, if there ever is, the Greeks can legally say, look, this was imposed upon us, we didn't vote, it's not democratic, it's not binding, and they can take back whatever is being given, because certainly there will be another default. Certainly the way to make sure there's a default is to follow the EU plan and the IMF plan and impoverish the economy, because impoverished economy makes it less able to pay, not more able. This is the one thing that the whole world has learned from the IMF austerity programs in the 1960s, the 1970s, and the 1980s.
Okay, so when you hear people debating this, they bring up Iceland. They also bring up Argentina. They say you can't make the comparison with Iceland or Argentina. In Iceland's case, they say, well, you know, it was the krona, it wasn't part of the euro. Greece is bound by the euro. So how do you come back and talk about those concerns or those folks who say you can't really compare the two?
Well, when Greece joined the euro, what it thought it was doing was joining a united Europe. And the idea of the united Europe, the European Union, was Europe was never going to go to war internally with each other again. Somehow, the idea of European unity became hijacked to surrender to a financial oligarchy and turn over all the property to bankers at the wealthiest 1% of the pyramid and roll back the last 1,000 years to Neo-Feudalism. Greece didn't realize it was signing on to Neo-Feudalism, and that's what the European Central Bank is all about. It's not a central bank. It doesn't do what a central bank does. It doesn't finance government budget deficits, which is what the Bank of England, the New York Federal Reserve, or U.S. Federal Reserve, and other banks do. It simply stands by and forces government deficits to result in more and more debt to commercial banks, so that instead of government deficits expanding the economy with new investment and employment and full market demand, a government deficit shrinks the economy by leading to foreclosure and forfeiture of the public domain, forfeiture of houses, and mass impoverishment. That is not what Greece thought it was signing on to. So what it should do is saying, this is not the Europe we thought we were getting. We're withdrawing. We suggest that Spain, Portugal, and Ireland withdraw, just as Ireland voted against the Lisbon Constitution. And they should say, this is nonsense. This is war, and we're pulling out, and we're putting our economy up for grabs for those countries, probably in the BRIC bloc, that will accept us into their currency area, because we're not going to stand for this.
Okay, so you mentioned Germany there. Germany is portraying themselves as the victim, that Greece are feckless characters that don't pay their bills, they're underwriting their retirements, and everyone should feel sorry for Germany. And yet, of course, Germany has benefited wildly because during all of this, it has kept the euro relatively cheap, and Germany is a huge export powerhouse. So talk a little bit about this. Is Germany the victim, or is Germany really the predator?
Well, both, because the question you're really asking is, what is Germany? Is Germany the banks, or is Germany the industry and the population? German banks have recklessly lent out money, as have French banks, to Greece, and are holding Greek bonds at who knows what value. We don't know how the German banks are valuing the Greek bonds on their balance sheet. Right now, a German or French or other European bank can buy a Greek government bond, say 50%, pledge this to the European Central Bank and get full euros at full value on the dollar, and get free money by speculating. We don't know whether the German banks or the French banks are carrying this Greek debt at market value or at nominal face value. So Germany itself is being sacrificed to the banks, and I don't think you can say that the interest of the banks, of the 1%, is the interest of Germany, unless you're redefining Germany and redefining Europe as a kind of neo-feudal oligarchic society run by the bank. So that's why Angela Merkel herself is losing electoral support in Germany. The whole political spectrum in Europe is being thrown into disarray by the fact that what do the words left and right mean when you have the whole issue basically one of finance. Finance cuts across the political spectrum from left to right. It cuts across the spectrum of what is Germany, what is France, what is Europe, and it really has put the class war back in business in a very different way than was foreseen in times past. It's a class war of banks against all the rest of society, trying to grab all of the property. And the political spectrum hasn't been able to deal with this, except that the socialist parties and social democratic parties and Socialist International, of which President Papandreou is the head in Greece, are on the far right of the political spectrum now. And the old right-wing parties, the conservatives, are moving to the left of the socialists. Everything is turned upside down by financializing economies in this way.
So financial engineering has become the new means of production. Setting up the ancient class wars have reemerged, but the classes that are getting disenfranchised are not even aware of the fact that they're being occupied by these weapons of mass financial destruction, these financially engineered products. It's a stealth coup. The people in Greece seem completely, they don't know that they're being attacked in this way.
Well, if you relate financial engineering to the means of production, it doesn't create new means of production, it strips assets. And this is what's been happening in America since the 1970s with the junk bond takeovers, the financial takeovers. Almost all of these takeovers have ended up impoverishing the companies. You have a financial takeover followed by a wipeout of the pension funds, of the employee stock ownership plans. You have a wipeout of what these companies have owed for pensions, and you have really a looting by the financial sector. This is not a production function. This is a looting function, and that's what the financial sector has turned into today. Looting, not financing the means of production.
Right. And you could say that these banks are, however, producing risk. That's what the end product of their production is, and they put it into the public domain. But I wanted to ask you just to walk through kind of the global financial market here for a second. Let's say that the European banks, they're buying Greek debt. They stand to lose a lot of money if Greece, or when Greece defaults. However, there's another wild card here in that apparently the American banks have taken out insurance for the European banks and their bond holdings in the form of credit default swaps. Who actually stands to lose the most here? The European banks who own the bonds, or the American banks who insured the bonds?
There are a lot of financial analysts that are asking that, and what they have noticed is that just as the EU and the European Central Bank was to take a more lenient position to Ireland, you had U.S. Treasury Secretary Geithner saying, wait a minute, take a hard line for Ireland. You have to crush it because the U.S. banks, financial casinos, have insured Irish debt. Same thing with Greece. It's the U.S. Treasury that comes in and says, wait a minute, our financial system has turned into AIG. We've insured the Greek debt, and we can't afford to take a loss, so your Europeans have to take a loss. You have to impoverish your labor so that our Wall Street casino capitalist firms like Goldman Sachs can make a killing, and they can't pay their people $100 million a year in salary if you don't impoverish your labor. We're making money off you, and that's the financial system. That's what we call stability. So you may think it's our risk, but it's not our risk if we're telling you what to do. It's what you refer to risk isn't a risk if you let the U.S. Treasury act as the battering ram for the Wall Street firms that insure the risk and say, you think there's risk? We're going to make sure that all the risk is on the debtor, and if the debtor can't pay, the creditors don't lose, the insurance companies don't lose, because we're going to take it out of Greek hide. Give us the Parthenon. Give us your islands. Give us your ports and your water supply and your sewer system for us to put toll booths on. That's the kind of risk that the U.S. is talking about. What Greece is risking is a lapse back into something worse than it suffered under the Ottoman Empire in the 17th and 18th and 19th centuries.
Is the IMF solvent?
It depends what you say solvent is. It was almost out of business 2 years ago when it had only Turkey as the final client. What has saved the IMF has been the Wall Street crisis. That's put it back into business, essentially as the hangman of economies. The IMF has been called in like a firm would call in a group of mafia assassins to kill the labor union organizers in a company town. And that really is the IMF's role. It's the assassin of economy. So is it solvent? Well, it's backed by the military. It's backed by the U.S. government and the IMF. The very fact that they've appointed such a notorious anti-labor advocate as Christine Lagarde should just lead all the countries to say, look, you're irreformable. We've got to start over again. We're not going to stand for it.
All right, Dr. Michael Hudson, we're going to have to leave it there. Thanks again for being on the Keiser Report.
Thanks, Phil. It's a very pleasure to be here, Max.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I want to thank my guest, Dr. Michael Hudson. If you want to send me an email, please do so at keiserreport@rttv.ru. Until next time, this is Max Keiser saying bye, y'all.